back to the beginning again. And my name is Steve Immel. I'm with the U.S. Small Business Administration. Also joining us today, Mary Doherty with the Wyoming Capital Access, formerly WIDC Frontier, CDC, Alex Smith with the Wyoming Women's Business Center, Jens Hansen with Hilltop Bank, and hopefully we'll get Kendall Hutchinson with Wyoming Smart Capital Network joining us today. So I'm going to talk a little bit about the SBA programs. I'm going to try and leave a little more time for the rest of our presenters. As you know, SBA does not lend money directly, except in the cases of either natural disaster, fire, floods, drought, those types of things, or economic disasters like we just went through with the PPP program for economic recovery. So SBA will help you ignite change and spark action in small business that can confidently, we can help you start a business, grow a business, expand a business, or recover, as we were just talking about with the economic injury disaster loans. The SBA will hopefully allow you to be more flexibility. We can provide flexibilities that SBA loans can be approved with a longer maturity than you may do conventionally. With the SBA guarantee, lenders may be willing to go to a little bit further maturity. Equity, we have lower equity injection requirements, and which leaves you also the ability for additional sources of income is coming as well. Collateral. A lack of collateral is not a reason to decline a loan. SBA, we're going to look at projections, and we're going to look at management, and we're going to look at business plans. We wouldn't turn a guarantee down on a loan strictly because of collateral. We're going to want the loan collateralized as much as possible, just as a lender would. But if you do not have a loan that's 100% collateralized, don't worry about it at this point in time. How can SBA-backed loans help you? Well, again, we can help you launch, grow, or repair a business or a startup. We can start or purchase a small business. We have access to revolving credit or working capital for day-to-day expenses. So we have revolving lines of credits that are available. And again, you can use the funds to purchase, renovate, expand facilities. You could purchase inventory, equipment, machinery, purchase land or real estate, and even export a product or service. So SBA can help you go global. We have counseling. We have U.S. Export Assistance Centers. They're currently called Export Finance Managers. The one for our region for Wyoming is Patty Brewer. She's out of Denver, Colorado, but she can help you if you're considering doing some exporting. And also you can work with the Small Business Development Centers. They can help you, and Wyoming Women's Business Center is also a great resource to help you out. We have the State Expansion Program, which is administered through the Wyoming Business Council right now. It's funded by the SBA, and there's money available for grants to help you out with marketing if you want to go internationally, if you want to build a website that can help you with that. If you're looking to go out to a trade show, they can help you with those expenses as well. So, and get export funding. We have several programs. We have the Export Express loans, we have export working capital loans, and international trade loans. And some of those loans come up with a 90% guarantee. So very advantageous if you can take advantage of some export loans. So SBA programs, there's the 504 program, which Mary Doherty is going to speak on, and the 7A loan programs. I'm going to go over that real quickly in just a second here. The microloan program, Alex Smith with the Wyoming Women's Business Center is going to give a little bit of detail on that. Community Advantage loans, again, Mary Doherty is going to speak to that. And then we talked a little bit about the international trade loans. So. And of course, Jen Hansen is going to talk about what your bank is going to look for when you come in for a commercial loan. So let me show you the loan program chart. Hopefully you could see that. So this is just a loan chart, and if any of you would like it, I'll give you my contact information here in just a little bit. And certainly send me an email. I can certainly send this out to you. This is what we call a quick reference guide. It's going to change the 1st of October at the beginning of the new fiscal year. But currently right now, any loans that are approved and dispersed through the end of this month carry 90% guarantee. But you can look at the loan program. Along the top here, you can see programs, and along the bottom side, the 7A program, that's the bread and butter of our loan programs. And then you can look at along the top too, okay, what's the maximum loan amount? Well, $5 million is the maximum loan amount typically. If you're going to have a loan approved right now and get the 90% guarantee, we can only go to $4,166,666. It'll talk about the use of proceeds, fixture, furniture, starting a business, those types of things. Maturities, we can go out to 25 years maturity if there's real estate involved with it. The maximum interest rate, those are the maximum interest rates that we allow lenders to charge. We do not set the interest rate. That is negotiated between you and the lender. Upfront guarantee fees, right now, there are no upfront guarantee fees through the end of this month, but again, that'll change the beginning of October. So starting the 1st October, the upfront guarantee fee is going to be anywhere from 0% up to 3.75%, depending on the loan amount. The upfront guarantee fee can be passed along to the borrower, so that's a fee you would pay, and 99% of the time it's going to be passed along to the borrower, so just be aware of that. And then who benefits? You could see, you have to be a for-profit business. Those things. We do have some businesses that are prohibited from receiving SBA guaranteed loans, so your lender will know what those loans are. And then going on to the bottom, we're not going to go through all this, but it talks about the SBA small loans. Those are loans of $350,000 or less. Starting October 1st, all loans of $350,000 or less are going to be no upfront guarantee fee charged. So those are the only exceptions for that fee waiver for the upfront guarantee fee starting October 1st. SBA Express is just a loan that the lenders can do themselves. They write their own loan authorization. They approve their own loans. Right now, the dollar limit on those is $1 million, and that's through the end of this month. Starting the 1st of October, that's going to be reduced down to $500,000. Below here, the cap lines, that's just your working capital loans and your revolving lines of credit, such as those things. The Community Advantage Loan Program, Mary's going to speak of that one, so I will let her discuss that. And then the international trade loans, we talked about those. Those are right now up to $5 million, 90% guaranteed. That is not going to change come October 1st. So that's a huge incentive for the lenders to possibly get an SBA guarantee loan if you can qualify for exporting. And then the working capital, again, that's just revolving lines of credit. Export Express, that's going to be similar to the SBA Express, except it's a little bit higher guarantee. And that's for exporting 504 loans. Mary is going to speak on that as well, and as well as the 504 loan financing. And then also Alex is going to talk about the microloan programs that are offered through the Wyoming Women's Business Center. So I'm going to go back to this page. There's my contact information. If you have any questions, please certainly either reach out to me, give me a call, email me. Also, what we're going to do is we're going to have give you the opportunity to ask questions at the end of everybody's presentation and then at the very end when everybody is through. So if you do have a question, just please type that into the Q&A box and I can see that and I can go ahead and answer that question for you. So does anybody have any questions for me at this point in time? Again, you'll have the opportunity at the very end of everybody's presentation to ask questions too, if you think of something later on. So. Well, it looks we have no questions at this point. So our next presenter is going to be Mary Doherty with Wyoming Capital Access. And Mary, I will stop sharing my screen and you can go ahead and start sharing yours.
Can you hear me okay, Steve?
Yes, we can hear you fine.
Perfect. And are you seeing my screen?
I am.
Okay, fantastic. Well, thank you very much. As Steve mentioned, my name is Mary Doherty. I am with Wyoming Capital Access, which we were formerly WIDC Frontier CDC. We went through a rebranding and name change to, in the hopes of being able to make it more clear what we do and what we offer to Wyoming. So Wyoming Capital Access is a nonprofit economic development lender. Our mission is to provide access to capital for Wyoming small businesses to foster economic development solutions that grow jobs, businesses, and communities. we, through partnerships with the U.S. Small Business Administration, as well as the USDA Rural Development, we are able to bring 2 loan programs to Wyoming small businesses to provide options for funding their capital needs when financing is not available from traditional sources at competitive rates and terms. So with our direct revolving loan fund, which includes USDA Rural Development and, as Steve mentioned, the SBA Community Advantage Loan Program, through these programs, we strive to reach underserved businesses, which are defined as new businesses, veteran-owned businesses, businesses located in rural areas, hub zones, promise zones, opportunity zones, and low to moderate income communities. With the 504 loan program, we help small businesses grow. And the goal in this program is to help small businesses establish equity in their own assets. You know, we like to see small businesses get out from leasing real estate or equipment and into owning real estate and equipment. SBA's goal with this program is to give small businesses access to similar rates and terms that big businesses get for financing. The 504 loan program is always a partnership with a commercial lender. And our direct revolving loan fund, including the Community Advantage Loan Program, is strictly our organization structuring the loans. So as I mentioned, our goal is to help when funding is not available or affordable through traditional sources. We are located in Casper, but we serve the entire state of Wyoming. As a nonprofit, we're governed by a board of directors that includes statewide representation. So we service the state of Wyoming. Our eligible borrowers are small, for-profit businesses operating in Wyoming that have demonstrated a need for the credit. Small is defined by SBA as being in less than 15 million in net worth and less than 5 million average net income over the previous 2 years. When I put operating in Wyoming, what's important to note here is that we cannot finance passive businesses such as real estate investment. We obviously cannot finance anything that is illegal nationally. So, and we cannot finance businesses that restrict patronage or have a prior government loss, you know, a business that has had prior government debt that has not been satisfied. But for the most part, we can finance any operating business in Wyoming. When talking about demonstrating a need for the credit, what we look for here is, can the business get financing on reasonable rates and terms through conventional financing? And if they can't, that's where we try to help. So I'm going to start with some talk about the 504 loan program. So the 504 loan program is intended for fixed asset financing. We can finance through this program land, buildings, the purchase of buildings or new construction of buildings, the purchase, installation of machinery and equipment. We can do some debt refinance through the 504 loan program, which includes refinancing debt on any of these above listed eligible 504 assets. We can also include some furnishings and fixtures if they're minor and necessary to the project, and professional fees that are directly related and essential. Those terms of a 504 loan, and when I'm talking about these terms, it's for the SBA portion of the project, 10 years for equipment, and real estate can be financed for 20 or 25 years. If a project involves both real estate and equipment, we take a weighted average to determine the term. And the rates on a 504 are competitive market rates, and those are fixed for the life of the loan. So 504 loans are priced when funded, so we cannot lock in a rate. I can tell you that the August 2021 rate on a 20-year 504 was 2.748, and that is the effective rate for the life of the loan. The 25-year priced at 2.866. And we do keep a historic rate chart on our website, so you can see the trends in the 504 loan program. As far as the debt refinance, recently this debt refinance program has undergone some significant changes, which have been a great plus to the program. So if you have questions about refinancing debt through a 504 loan program, I would encourage you to contact us and tell us a bit about your project, and we can discuss your options using the program. So this next slide kind of is intended to demonstrate what structuring a 504 loan might look like. So the first thing we do is we calculate the total project cost. So we add all the eligible costs together to reach total project cost. And this is just a sample of, you know, what one might look like: purchasing of the land or building, construction or renovation, some machinery and equipment, furnishings and fixtures, as I mentioned, minor and necessary, and then also some professional fees that are direct and essential. And those might include appraisal fees, architect fees, environmental studies, engineering fees. So we add all these together to come up with our total project cost. And once we've determined our total project cost in a 504, we determine the funding sources, or we calculate the funding of this project. So with your traditional or typical 504, the funding is 50% private, commercial lender, 40% SBA 504, and then 10% is an equity injection from the borrower. So on the 50% first mortgage loan, the benefit here is the borrower gets to select their first mortgage lender and negotiate rates and terms for that first mortgage loan. So we want to see you be able to work with the lender that you can get your best rates with, or that you trust and enjoy working with, and we will work with them as well. Typically, a 504 loan is for 40% of the project. However, if the business is a new business, and SBA defines new business as less than 2 years, or less than 2 years in operation, or a change of ownership that might have taken place over the last 2 years. And if that's the case, SBA will require the borrower to put in 15%, and SBA will reduce their participation to 35%. The same is true if there is something single or special purpose about the real estate that is being financed. An example would be a car wash. Car wash cannot be easily converted into something different. So if we are financing a single or special purpose project, SBA's participation again will be reduced to 35%, and the borrower will be required to inject 15%. If by chance a project is both single or special purpose and new business, SBA's participation is capped at 30%, and the borrower will be required to inject 20%. Now, the 504 maximum loan amount is $5 million for the most part, and that means this 40% is $5 million. So that will allow a total project of up to $12.5 million, thanks to our partnership with our participating lender here. So the next loan program I want to talk a bit about is our direct revolving loan fund, which includes the SBA Community Advantage Loan Program. And this can be used, this has a little more flexibility. It's generally available for most business needs up to $250,000 in financing. So for instance, we can use it for inventory, working capital, and that's something we can't do in the 504 loan program. The term of a community advantage loan is structured to match the life of the assets being financed. So we typically see about a 5 to 7 year term, maximum 20-year term if we're financing real estate. The rates are determined based on risk. These are projects that typically are not able to be financed through a conventional lender. So the rates are a bit higher due to that risk. As Steve mentioned earlier in the presentation, lack of collateral is not a reason to decline a loan. So when it comes to collateral for community advantage, we look at what collateral is available, and we secure the loan through that available collateral. And as I said before, there is no partner lender involved in a community advantage. It is Wyoming Capital Access that you will work with for a community advantage loan. I will note that the maximum financing is 90% of the project or of the financing needed. We require some skin in the game from the borrowers. So if you have, for instance, some equipment to purchase or inventory to purchase, we're going to want to see you come up with 10%, and we will work to finance the remaining 90%. So a bit about our application process. I encourage you to visit our website. We have an online application process, but we also have a downloadable form PDF application for those who are more comfortable with that. We would require for application, oh my gosh, if it's a new business, we're going to want a business plan and 2 years of financial projections. If it's an existing business, we're going to want 3 years of business tax returns. We're also going to want current year financial information. Regardless of new or existing business, we're going to want 3 years of personal tax returns for any owner of 20% or more of the business. We're going to ask for a current personal financial statement for any owner of 20% or more of the business. This form is available on our website. And we're also going to want a detailed list of the intended use of loan proceeds, and that might include bids, quotes, invoices, purchase agreements, etc. So these documents will be enough to get us started. As we go through the request, there may be other items that we need, but this is a good start. I will note that for business plans and financial projections, in the case of a new business, I encourage you to take some time on those, seek some expertise on those, perhaps from like the Small Business Development Center. We really need a good narrative of what you're looking for, what your plans are. We need, for financial projections, we're really going to want to see the details behind the numbers, not just numbers themselves. We really want to see that a lot of thought and consideration of it has been put into determining the growth of the business through this financing. This last slide is just our contact information that kind of summarizes our loan programs. I'm welcome to answer any questions anyone has, and I would also invite you to contact us to discuss your project, and we can hopefully let you know fairly quickly if it is something that we are able to help with.
All right, thank you, Mary. Does anyone have any questions for Mary before we move to our next presenter? Again, please type them in your Q&A box and we will get those answered for you. All right, we do not have any questions at this time. Our next presenter is Alex Smith with the Wyoming Women's Business Center, and Alex is going to talk about the microloan program. So It's all yours, Alex.
Thanks, Steve. Get this up there. Hi, everyone. My name is Alexandria Smith, or Alex for short. I am the microloan director for Big Shocker here, Wyoming Women's Business Center, also known as WWBC very affectionately. I want to start by telling a little bit about who we are. So we are a nonprofit organization whose mission is really to enable and empower Wyoming entrepreneurs. We do place a special emphasis on women who are economically or socially disadvantaged. We really accomplish that mission through 3 distinct programs. Our first is our business counseling and training program, which is of course always free. Our second is our microloan program, which is really my area and offers loans from $500 to $50,000 for businesses that typically have been denied from traditional lending sources. Third is our Artist Development Center. We run that in conjunction with our Works of Wyoming store in downtown Laramie. If you have not been, I highly, highly recommend it. It is an amazing little store. But today we're going to focus really on our microloan program. We have been in existence actually for over 20 years now. And what I really want to sort of emphasize today is that we specialize in micro enterprises. Those are businesses with less than 6 employees. They're usually 1 to 2 person businesses, and they're able to launch for really under $35,000. Businesses like yoga studios, hairstylists, in-home daycares, marketing consultants, cleaning services, those are typically our clients. The purpose of our microloan program is really to help businesses start or expand. And we do that by providing those $50,000 loans. And more importantly, we do provide business counseling and education to help the business succeed. We really, really maintain communication with you to mentor you throughout that journey as a business owner. One of the things that all lenders, and Mary just mentioned this, are going to ask is when you apply for any type of funding, is your business plan? Especially for those micro enterprises, producing that professional, solid business plan and a full set of financials and cash flow projections can be really daunting. So the WWBC is really here to help. We have an amazing brand new program called Dream Builder. It's an online education course that you can take for free, and it guides you through developing that business plan. At the end of the course, you will have answered really all the necessary questions to build that solid business plan. You literally hit a button and it formulates all of that content into a business plan layout with a beautiful table of contents. And we're with you every step of that journey. Christine Langley, our business education director, really will hold your hand throughout that program. We also offer online business education webinars every single month. These are on a variety of topics, and of course, they're always free. All of our webinars are only 30 minutes. We understand most of our entrepreneurs are really, really, really busy, and we deal with a lot of working parents. So we pack a ton of valuable information into those 30-minute webinars, and we really ensure that each session has that high value you're looking for in those 30 minutes. You can visit our website at wyomingwomen.org, listed there, and register for any of these upcoming webinars. Really, once you've worked with us and have that solid business plan and financials, you're ready for funding. We don't compete with commercial banks. So if you are able to get funding from traditional lending sources, we will really stand on the sidelines and cheer you on. We'll keep working with you through our business education and our one-on-one counseling. But we really come in when you're denied from traditional bank sources or lending sources. Maybe you have lower credit score or you don't have the business financials they're looking for. That's really when you become eligible for our microloan program. We only service businesses that are owned and operated in the state of Wyoming. And it is really important that the owner has working knowledge of their industry. We also look, and this is going to be the hot word for today, we also look at any collateral that's available to secure the loan. And our loans require personal guarantees. This is a list of considerations our loan committee really uses to evaluate sort of each and every loan application. But rest assured, again, if you've gone through our Dream Builder program and you've really taken the steps to build that solid business plan, most of this list is going to be explained and verified within that business plan. So this is going to seem daunting now, but again, we have those educational resources to get you to this point. This is contact information for myself, our business education director, Christine Langley, and our one-on-one business counselor, Jonathan Howdeshell. We have a really simple online application on our website. You can complete it to become a WWBC client and really get started on that journey. It is the first step in our microloan process. So if you think you're interested in securing a microloan in the future, I highly encourage you to become a client sooner rather than later by going to that wyomingwomen.org that's listed down at the bottom. And of course, any questions, concerns, you are more than welcome to call or email me.
All right, thank you, Alex. I appreciate it. I wanted to mention one thing with the Wyoming Women's Business Center. Even though the name is the Wyoming Women's Business Center and their emphasis is serving women, they also serve men as well. So just keep that. If we have some men on the webinar today, they have access to the same resources through Wyoming Women's Business Center as women do as well. So we do have. Mary's answering one question, and it talks that someone asked a question: if they form an LLC e-commerce business in Wyoming but live in a different state, does that affect your eligibility for funding? As far as the SBA is concerned, the programs for the SBA are the same in every state across the country, so it wouldn't affect that. With the Women's Business Center, the microloan program, your business would have to be located in the state of Wyoming. And then for Mary Doherty with the 504 program and the Community Advantage program, again, your business would have to be located in Wyoming for that as well. Jens Hansen is going to be speaking next, and I'll let Jens address that question, and Kendall will be following him, so we'll let Kendall answer that question as well. So I think right now we're going to be moving on to our next presenter, which is Jens Hansen, and he's with Hilltop Bank in Casper. So the floor is yours, Jens.
Okay, thanks, Steve, very much. I appreciate everybody coming out to the webinar this afternoon. I'm going to be talking about traditional bank financing to either start a business, grow a business, or purchase a business. But what I really appreciate about this webinar and this group of attendees is that a traditional bank, a bank like mine, is a great hub. We partner with all the organizations that are presenting today, either for loan enhancements or for referrals. So, you know, if you're not sure where to start, a traditional bank is actually a pretty good place, because we can get you involved with some of these folks, even if you don't qualify for traditional bank financing. But as far as traditional bank financing goes, I'm going to run you briefly through how that looks. My name is Jens Hansen. Again, I'm Vice President of Lending here at Hilltop Bank in Casper. There's my contact information there if you'd like that. And a picture of me in a purple shirt as well. So what really are banks looking for if you come into the bank to start a business or apply for any type of commercial loan? And the simple answer is the 5 C's. You've heard a lot of C's already. I think we've spoiled it as far as collateral goes, but I'm going to run briefly through those. And the first one is cash flow. Cash flow. It's the most important. Capital, character, collateral, there's that one again, and conditions are the other 4. So cash flow is king when it comes to traditional bank financing. If cash flow is not there, it's pretty much a hard stop for any kind of traditional bank financing, because the only thing ultimately that can repay a loan is cash. So what is cash flow? And what do we mean when we say that? And if you don't know, it's really the net cash available to make payments on a loan. Oftentimes we'll get customers that are in and they may have an existing business or be considering purchasing a business, and they're thrilled because that business has done $1 million in revenue in the last year. And while those numbers are fantastic, that top line revenue is not what banks are going to look at as far as your ability to repay. It's going to be that net income after all those business expenses. So the ratio really that we're looking at when we're calculating that is called the debt service coverage ratio. If you've ever borrowed money personally to buy a vehicle or a home, you've probably heard of a debt to income ratio, taking your monthly debt divided by your monthly income. The debt service coverage ratio is actually just the opposite, and it's used on a business. It's taking the business's annual revenue divided by, or annual cash flow or net income divided by the annual payments on any existing loans as well as any new loan requests. So ideally, and this is going to vary by industry, by bank, by business, but banks generally like to see at least $1.25 in free cash flow for every $1 in debt payments. And again, that's kind of on an annual basis. So that would be a 1.25 debt service coverage. That's really traditional. Like I say, it can vary by business and by bank and by industry, but that's just a rough barometer. And we determine that looking either at historical income from tax returns, financial statements from the business, or in the case of a startup business, that projected income. And those, and again, has been mentioned multiple times, that business plan and those income projections are going to be key for anything if you're looking to start a business. And those income projections in particular is what the bank's really going to focus on. And you need to be prepared to explain how you arrived at those projections and potentially defend them or justify them, because the bank's going to definitely want a good comfort level that those projections are accurate. When it comes to cash flow, we're not only taking into account the business's cash flow, we do take into account the personal debts and personal income from other sources or the business of all of the business owners as well. And that's called a global debt service coverage or a global cash flow. So most banks are going to look not only at the business, but also at the business combined with the individuals. You know, ultimately our goal with commercial lending is to not over leverage a business or individuals, because that's really a lose-lose for the customer and the bank. So making sure that we're analyzing the cash flow is key. So when it comes to the rest, capital, this is what the business owners are contributing to the project, to the startup, to the business expansion, whatever that may be. Really, this is the down payment, and this is where organizations like the SBA and some of the others can step in and help if we've got a great business idea, but maybe the business owners or the applicants don't have as much capital as we need. So for traditional bank financing, if you're looking to purchase real estate and you're planning to occupy that space, for example, a restaurant, or you're looking to buy a shop or something along those lines, generally you're going to need at least 20% down on the purchase price. If you're looking at investment properties like apartments or things of that nature, where you're going to be leasing the space out, generally the bank's going to require 30% down. So you can imagine on expensive real estate purchases, those numbers can get pretty big. When it comes to things like equipment and inventory financing, things of that nature, it's going to vary quite a bit more depending on if what you're purchasing, especially from an equipment standpoint, is new or used, as well as how specialized it is. You know, if you're looking to purchase a welder or some trucks or something like that, that's pretty simple. If the bank were forced to resell that to repay the loan, we may not need as much down. If you're looking at something highly specialized, that's not necessarily the case. So the bank is generally going to require more money down the more specialized the equipment might be. Of course, there's also unsecured financing and things of that nature. It's not always, you know, you're not always having to put cash down, but in general, banks want to share the risk. You know, we want to put people in business, but banks don't want to take on 100% of the financial risk when it comes to putting people into business. Character, and what character really means is how the owners of the business handle their personal finances. And you know, if you don't read that as if you've had some credit issues or things like that in the past, that you have poor character. It's just the C that they chose to represent that. But credit scores do matter when it comes to commercial lending, traditional bank financing. And it just makes sense, you know, if we're going to be lending money to a business, we want to make sure that the owners of that business handle their own finances in a responsible way. And if you've had issues in the past, it doesn't mean those can't be overcome by any means. But, you know, it's an important factor when it comes to commercial lending. Collateral, we've talked about quite a bit. When a bank's assessing collateral or what collateral is available, we're going to look at the quality of that collateral. as far as what kind of shape it's in, you know, how new it is, things of that nature. The location and possession and ease of resale. A lot of times we'll have businesses, especially existing businesses that are looking to expand, that may come in and they say, you know, I want to put my business up as collateral for the loan. And there's certainly value in things like a business's name and reputation and their book of business, you know, their historical income. There's value in all that. But from a bank standpoint, traditional financing, we're really only interested in collateral that we can put our hands on, and ultimately, if we had to, sell it to repay the loan. Things like hand tools or inventory are acceptable types of collateral, but from a quality standpoint, they're not as good as something like a real estate or a vehicle or things of that nature. So having solid collateral is another thing we'll take into consideration. And then there's conditions, and this one is difficult because this is really out of the control of the business and the applicants and the bank. So conditions are going to be things like the industry, your experience level in that industry, in that business, and then things such as local and national economic factors. As you can imagine, this really came into play in 2020 with the struggles with COVID, the downturn in the energy industry, which is, you know, makes a big part of our economy. Banks in general really started to look at this C of credit more, and it had a bigger impact on who we were lending money to or who we weren't lending money to. So that's a lot of information. That's a lot of things that we look at. I know it seems, you know, daunting if you've never gone through it before. The good news is that you don't have to be perfect in all of these different areas. You know, if collateral is a little weak in one area, but the cash flow is really strong, you may still be a great candidate for traditional bank financing. And as I've already mentioned, we have these loan enhancements available as well, which are great for overcoming challenges with capital and with collateral. So if you don't have collateral, doesn't mean you're going to get turned down for a loan. It just means we may need to get a little bit more creative and work with some of our partners with these other organizations. These loan enhancements can't typically make up for poor credit or insufficient cash flow for a business. You know, so they're out there to help, and they're fantastic. They're not always a perfect fit, but we're always interested in trying to help businesses get going and get to the right spot. And you know, Wyoming Women's Business Center is a great one if the bank just can't get it done for one reason or another. So there's a lot of options out there, and that's kind of an overview of how our traditional bank financing works. And if anyone has any questions on that, I'm happy to answer those.
All right, thank you, Jens, very much. If you have a question for Jens, just please type it in the Q&A box, and we will answer that question for you. Okay, we have a question here. We own land in another state that is associated with the business. Is that something that could be used as collateral?
Sure, I'll just answer that over the phone. That's going to really vary by bank, to be honest. You know, a community bank like Hilltop, where I work, we tend to focus primarily in Wyoming. And the primary reason for that is real estate laws and lending against real estate varies by state. So we're not as familiar with real estate lending laws in, you know, Colorado or Utah or Montana. It doesn't mean that we won't do it or that there's some hard and fast rule. It just sort of depends on our comfort level. And so the short answer is maybe. There's certainly no rule against it, and it's really just going to depend on the bank that you're working with.
All right, thank you, Jens. Is there any other questions for Jen before we move forward? All right, thank you, Jens. Our next presenter is Kendall Hutchinson, and Kendall's with Wyoming Smart Capital, and Kendall's going to talk about the programs available through their organization. So take it away, Kendall.
All right. Steve, can you hear me okay, and can you see my screen?
Yes, sir, on both.
All right, well, thanks everybody for tuning in today and attending the webinar. And Steve, thank you for putting all this together. I think it's a great opportunity to get information out there to folks that either want to start or expand a business. So without further ado, I'll dive into our program. My name is Kendall Hutchinson. I'm the loan officer for the Wyoming Smart Capital Network. It is a private for-profit business, but it is quasi-public and private. We have a board of directors that consists of public officials across Wyoming. And we work with private banks to deploy funds into small businesses across the state. So initially, how we were funded, this goes a little bit into our history. I won't spend too much time here. There was a bill that passed following the recession in the late 2000s and 2008, 2009. There was a Treasury bill that passed to allocate money to each state to enhance entrepreneurship and access to capital for small businesses. The bill was called the State Small Business Credit Initiative. And Wyoming's piece of that pie, it was $1.5 billion that went out to all the states. Wyoming's piece of that pie is $13.2 million. And that is what we have managed over time. And it is now an evergreen fund, and it's a perpetual resource for the state, hopefully many, many decades into the future. So as I mentioned, we have a board, an advisory council of public officials. These are like city managers and treasurers and clerks of different municipalities across the state. Our initial mandate was to deploy capital to businesses, keep track of low and moderate income communities that have benefited, as well as women and minority businesses, and we track job creation and retention as a part of our business investment. What we developed over time is a credit guarantee program. This is like a collateral enhancement tool that Jen's hit on in his presentation. And we're able to do that by developing relationships with commercial lenders across the state. And as I said, this is now an evergreen fund. Hopefully will be a resource for the state for many, many years to come. You see a map there on the right. The state of Wyoming did not apply for this Treasury bill as a whole. So what happened was a group of municipalities banded together to make their application to Treasury. And those blue counties is what was eligible for our original source of funding. As of 3 months ago, we now have a statewide opportunity, and I can go into the detail about the differences between our original source of funding and what's new for us. So the product is it's what's called a subordinated loan participation. We're subordinate in the event of a default. So if a project were to go south, what makes it subordinate is that the lender, the bank that we work with, will be made whole and get their principal paid back through the liquidation process prior to us receiving our principal portion back. So you can view us as like a wholesale operator to deploy these funds. We work with our network of banks. If I were to get a call from a prospective borrower, my first question to them would be if they have a relationship with the commercial banker. And depending on where they are, I would try and connect them with someone I've worked with in the past, or meet with a banker that I haven't met with, and I'd be happy to share program information with them as well. Ultimately, it's going to be up to the bank and the borrower to determine if they want to proceed with an application to us to help enhance the credit of the borrower. What we offer is up to 25% of the total loan. That's not to be confused with the total project cost. So typically a lender will have a borrower commit some skin in the game. We don't have a hard and fast rule as to what that might be. That's really going to depend on the banker. So we can take a look at the loan's bite size and can purchase up to a quarter of that amount. We can offer terms of up to 10 years. So for equipment or revolving lines of credit, those are shorter terms. But where that comes into play with a real estate project, hopefully at the end of 10 years, that loan would be conforming, and the bank has a greater comfort level without having to have us as a third party involved in the project. So hopefully when that 10-year sunset is, the loan can be brought on by the bank individually. The sources of funds, these are really traditional commercial loan applications that can be for equipment, working capital, real estate acquisitions, business purchases, but it cannot include the goodwill of a business. So these are really asset-backed transactions and construction projects in certain counties. Our original source of funding allows for construction projects, and this new source of funding is limited in that regard. There is a fee that the borrower would pay at closing, depending on the term and the level of participation. Never would that amount exceed 1% of the total loan. So our process, we've tried to streamline this as best we can. We understand that often there's a tight deadline with lenders and borrowers, and we don't want to be the ones to slow that process down. So we try to make this as smooth as possible. The bank and the borrower will determine if our program is a good fit for them. The lenders will go through their normal process in underwriting. They'll either identify a collateral shortfall or issues with collateral. For example, if it's specialized equipment and the banker has a hard time putting a high enough value on that collateral, they're going to want some assistance in the project. So that's one primary example is shortfall in collateral. The other is a borrower can hold on to their cash for operations of the business. Depends on the bank. Some banks will offer a line of credit for that very purpose to help a business overcome differences in working capital in the short term. And others will say, okay, let's just hold on to your cash so you won't have a line of credit. That will depend on the banker that you work with. But we see the entire file that a banker would see. We see the business plan, the financials, their credit write-up, and an application, and that really gets our process started. We make sure that it's eligible. We can't loan against anything that's illegal nationally, and just make sure that it checks all the boxes, if you will, of our program. We're always trying to grow our banking network. We've done projects with 17 banks that are noted there. But if you have a banking relationship with someone outside of this list, I would be more than happy to visit with them. So again, a little bit back to the process. Once we identify that the project is a go and we give the banker thumbs up, they have the green light to proceed, we would send them our batch of documents, their certifications of what the source of the loan, what the use of the loan is for. So there's, we've tried to reduce the paperwork as best we can. We would send the lender those documents. The only thing that the borrower would sign then from us would be a certification of loan parties. A closing date is identified then, and we would see drafts of the loan documents that would be signed at closing. We have a compliance process with folks that are outside of our team that communicate with our public officials that the loan is a good one, it's eligible, and then we seek approvals for them for funding. All that can take place in as little as 2 weeks, and we would wire the lead bank our portion of our participation on the day of closing. So this gets into the information I shared earlier about there's a difference between our original source of money and our new one. Our new source of money covers the entire state. If you are in a gray county there, you are eligible for our program with the exception of construction funding. we would not be able to participate on a project that has construction tied to it. But other than that, it's the same funding, the same product and process. It was an opportunity for us to leverage more federal dollars for our program. So that was new and exciting for us to be able to offer this statewide. And again, this is a first come, first serve opportunity for businesses out there. And I would be happy to answer any questions that folks have. And Steve, I believe I can hand it back to you at this time.
Steve, we don't have any audio on you.
Okay, can you hear me now?
Yes.
Yes.
Okay, thank you. My phone was just acting up a little bit there. Thank you, Kendall. Thank you for your presentation. That was wonderful. Do we have any questions for Kendall? Again, please type those questions in the Q&A chat box and we will be able to see those questions. Does anybody have any questions for any of the panelists from today? Again, please type the questions Q&A box and we will make sure you get answers to your questions. So is there any questions for any of the panelists? One last call for questions. All right, we do not have any questions. Okay, there is a question for Kendall. Kendall, when you mentioned first come, first served, does that mean there's a certain window when these funds are available?
No, there's not. What makes it an evergreen fund is if these projects mature, say you have a 5-year loan that we're participating on. Once we receive those monies back, it's just going to go back into our pool to be used. So if money is available, we haven't come up on that problem before, but let's say all of our money is invested and we don't have any free cash to invest, that's the only time that would be an issue for us, but hasn't been a problem so far.
All right, good to know, good to know. Any other questions for any of the panelists before we conclude for today? Well, it looks like we have no further questions at this point. I want to thank all of our panelists, Mary, Alex, Jens, Kendall, thank you so much for your presentations today. They were all wonderful. You gave a lot of great information for people and a lot of additional resources. So thank you so much. I also want to thank the Wyoming Women's Business Center for hosting this webinar today via Zoom. It worked out wonderfully and we appreciate that very much. So I'll just ask one more time for any further questions before we conclude.
Steve, I did want to answer a question really quick. There was a Q&A about
Certainly.
access to the Dream Builder question, or the Dream Builder program, which I answered privately. But Tamara, I see that you were asking for that too. To get access to that free program, you just need to first become a client of the Wyoming Women's Business Center. So you'll go to wyomingwomen.org. There's a button at the top of the page that says sign up now, and that will get you into our client database. Jonathan Howdyshell, our counselor, will reach out to you and he will funnel you to those resources. They're housed in a separate online database exclusively for our clients.
Right, thank you so much. We do have a question here. Looks like it's being answered privately. It was question was, if the business is split between 2 states, can we fill for businesses assistance as a whole? And it looks like it has to be either Wyoming or Idaho. Hope that answers your question, Jennifer. All right. Any last questions before we conclude for today? All right. Looks like we have no further questions. If you do think of questions that you would like answers to, please get a hold of any of the panelists. You can also get a hold of Alex with the Wyoming Women's Business Center. She has all our contact information. If you don't have her contact information, and she will make sure we get the questions to us. So I want to thank everyone again for joining us today, especially the presenters, and thank you all the participants in the audience for joining us today. I hope you found this helpful and useful, and gives you some additional things to think about and some ways to move forward. So thank you everyone for joining us today, and that concludes our webinar.
Thank you, Steve.